Hello dear students, I hope you are all fine. This lecture we are going to start a new topic which is accounting for branches. Our learning objectives number one is to understand the concept of branches and their classification. Number two, learning various methods of charging goods to branches. Number three, to prepare the combined financial statements for home office and its branches. So, why does any business need to open branches? When the business flourish and our brand is well known by now, it becomes necessary to open more branches or other branches in many different places or towns in order to deliver our services or products to much more customers as we can. This will result in an increase in sales and of course an increase in profits. And we can define branch as a section of an enterprise. This is the main enterprise and these are other branches for it. We can say that branch is a section from the enterprise that is geographically separated from the rest of the business. Now we come to types of branches. Accounting wise, we have two types of branches. We have dependent branch and independent branch. What are a dependent branch? It is that branch where or when the home office or the head office keeps all the accounting records. So when the branch doesn't have its own accounting records, we call it a dependent branch because it depends on the head office in keeping its records. But if the branch is separated and has his own or full accounting system, we call it a or an independent branch. So according to the type, we can divide branches into inland branch and foreign branch. Foreign branch is a branch abroad. Okay, inland is within my own country. And the inland branches is divided into dependent, as we just said, and independent branches. What are the objectives of branch accounting? We have many objectives of branch accounting. For example, to know the number of transactions occurred in the branch, to find out the nature of expenses incurred in the branch and its requirement, to know about the cash position of the branch, to know the inventory level at the branch. In short, we deal with every transaction that occur or happen within the branch. Okay, but the most important is finally to prepare the combined financial statement between the head office and the branch. We combine the financial statements for both the head office and the branch in one financial statement called the combined financial statement. So to achieve the previous objectives and to deal with the branch and the head office accounting wise, we have two main accounts. One of them called home office account. This account appears in the branch records. When you open the journal of the branch, you're gonna find this account repeated many times. Why? Because this is the account that the branch use to record or to say that some cash was sent from the home office, some goods was sent from the home office to the branch. The branch use the account called home office in order to record the transaction between the branch and the head office. So this account is used by the branch to account all transaction with the home office. It is credited for all cash, merchandise, and assets provided or sent by the home office to the branch. And it is debited for all cash, merchandise, or other assets sent from the branch to the home office. This is very important in order to help you to make the journal entries. So study it very well. The second account used in recording the transactions between the home office and the branch is called investment in branch account. Where does it appear? You're gonna see, or you're gonna find this account within the home office records, within the journal of the home office. When you open the journal of the home office, you're gonna find investment in branch account repeated many times. Why? To record, so the home office record all sent cash, merchandise, or any services to its branch, and to record all cash, merchandise, or services sent from the branch to the home office. So this account is used by the home office. It is debited for cash, merchandise, and services provided to the branch, and it is credited for cash and other assets received from the branch to the head office. Here is an example to illustrate how we record the transactions between the head office and its branch in both the records of the home office and the branch. You have some financial transaction that occurred between the home office and the branch. Number one, 10,000 cash and merchandise of 20 were transferred from home office to branch. 1,500 operating expenses were allocated by home office to the branch. Branch A collected notes receivable of 1,000 to the home office. Branch A sold 20,000 on account and incurred operating expenses for 500. The cost of goods sold was 17,000. Branch A had a net income of 1,000. You are required to record these transactions in both the records of the home office and branch A. So we are just going to record each transaction and see its effect on both the home office records or journal and the branch record or journal. The first transaction states that 10,000 cash and merchandise of 20 were transferred from home office to branch A. Type. Let's start by recording the transaction in the journal of the home office. At the home office, we're gonna use the account called investment in branch A. It will be debited by 10 and 20. Why? Because branch A received and gained these values. So investment in branch A will be debited by 30, and cash will be in the credit by 10. Inventory will be credited by 10 because these assets were sent from the home office to branch. This is within the home office journal type. What about the branch journal? In branch, you're gonna find that the branch will gain and will receive cash for 10 and inventory for 20,000. This means that cash and inventory will appear in the debit side within the branch journal. And we're gonna place home office account in the credit. Why? Because home office here is the creditor, is the one who sent these assets to the branch, to branch A. So home office account will appear in the credit side at the records of branch, and so on for the rest of the transaction, as we're gonna see. The second transaction states that 1,500 operating expenses were allocated by home office to the branch. It means that the home office paid operating expenses for the branch type. At home office records, we're gonna use investment in branch A. It will be in the debit side for 1,500, and operating expenses will be in the credit side. This is to record the payment of expenses for the branch. At the branch records, we're gonna find that operating expenses will be in the debit, but who paid or How was it paid? It was paid by the home office. So home office will be in the credit side. Transaction 3, branch A collected notes receivable of 1000 to the home office. At home office, investment in branch A will be debit, and the collected notes receivable will appear in the credit, because investment in branch A or branch A collected these notes receivable. So investment in branch A will appear in the debit side by 1000, and notes receivable will appear in the credit side. This is at home office. At branch, what happened in branch? What happened in branch is the branch collected cash, so its cash will increase, but it collected this cash in sake of or for the benefit of the home office. So home office will be in the credit side. Transaction number 4, branch A sales of 20,000 on account and incurred operating expenses for 500. The cost of goods sold was 17,000. Here, the home office is not involved at all. This is why at home office there will be no journal entry, because this transaction doesn't involve the home office, or it is not an transaction between the home office and the branch. This transaction only involves the branch, so its journal entries will only appear at the branch record. It is split into two parts, one entry to record the sales and one entry to record the expenses. Here we can say that we sold goods for 20,000 and on account, and its cost was 17,000. Journal entry here will be account receivable in the debit for 20, cost of goods sold for 17, sales for 20, inventory for 17. This is to record the sales. What about the expenses? Like any expenses, we're gonna say operating expenses in the debit and cash in the credit. Transaction 5 states that branch A had a net income of $1,000. At home office, I'm gonna say that investment in branch A, of course, increased by 1,000 because the income that generated at branch A, it will be in the credit. This is to record the income that happened or occurred within the branch. At the branch, we're gonna say that income summary in the debit and home office in the credit, because this income will be transferred to the home office. So when you are done, this will be the final solution: the journal of the home office, all transaction recorded, then the journal of the branch. Here is the journal of the branch, all transaction recorded after each other. Now we come to an important topic, which is the combined financial statements. Combined financial statements are those financial statements that we prepare for both the head office and its branch. An important question here might arise, and I might ask you, and you should study this very well. What about the similarities and dissimilarities between consolidated financial statements, which we are already discussed before, for a parent company and its subsidiaries, versus combined financial statements for the home office and its branch, which we are going to discuss now? The similarity between the consolidated financial statement and the combined financial statement is that we use the same concept. We just add or combine the similar items like assets and liabilities, and we also eliminate the intercompany transactions. There are eliminations that we do within the consolidated financial statement in the working paper, as you remember, and within the combined financial statement for home office and its branch, we use the same concept to eliminate the intercompany transactions between the home office and its branch. This is regarding the similarities. What about the dissimilarities? The dissimilarity is the consolidated financial statements for parent company and subsidiary is more complex. We need to calculate the goodwill to know if there is a goodwill, positive goodwill or a negative goodwill, and we need to know the acquisition, whether it is 100% or less than 100%. We might have minority interest. So the dissimilarity here, or the main dissimilarity, is that consolidated financial statement is more complex and has more extra items like minority interest and goodwill. Here is example 2. If you know that the adjusted trial balance of home office and Mason branch is as follows. You have the adjusted trial balance for the home office and its branch called Mason. We have these items, these accounts, sales, cost of goods sold, operating expenses, all these accounts for the home office and for Mason branch. And you are required to, number one, prepare a 4-column working paper for combined financial statements. We need to combine these figures in one financial statement for both home office and Mason. Number two, prepare the financial statement of home office, which is the combined financial statement. So we need to do two required here. First, a working paper. Working paper in order to add the similar accounts and to eliminate the intercompany transactions. Then, secondly, you need to prepare the combined financial statements for the home office, which includes both home office and Mason. Here is the solution. Number one, to prepare the working paper for combined financial statements. You're gonna copy the given. Here are the items. Here is the home office. Here is Mason branch. This is the given adjusted trial balance. And you're gonna add two main columns with 4 sub-columns. The first column is called eliminations. The second column is called combined. Each of them is divided or split into debit and credit. Let's start by the elimination. What are we going to eliminate? We're going to eliminate all the intercompany transactions between the home office and Mason. How can we find this type of transactions? You're going to find it called investment in Mason. Investment in Mason here appears in the home office. This means that this figure is an intercompany transaction. This will be eliminated. How to eliminate it? It is here in the debit side. Place it in the credit. What else considered as an intercompany transaction? Home office that appears within the branch. Mason branch for 26 home office. This is an intercompany transaction. This will be eliminated also. How to eliminate it? It is placed in the credit. You place it in the elimination column in the debit. These are the eliminations that you're gonna make. Rather than that, you're gonna just add the similar accounts, sales in the home office credit for 400 and in branch credit for 80. You're gonna add these together and place it in the combined column for 480. Cost of goods sold in the debit for 235,000 and in branch also in the debit for 54,000. You're gonna add these figures together and place it in also in the debit in the combined column. Operating expenses 90 and 23 equal 113 in the debit. Retained earnings 70 in the credit, and there is no retained earning in Mason branch. So you're gonna just place the figure as it is without any adding in the credit side in the combined column. 40 will remain 40 in the debit. 25 and 5 equal 30. And so on until the end of the given trial balance. You're gonna add the similar accounts, okay, and eliminate investment in Mason and home office. Then add the debit side in the combined column and the credit side in the combined column, and they should be equal. Of course, what happened to investment in Mason, it is placed here in the debit and placed here in the credit. So 26 will be cancelled or eliminated with 26. The result will be 0. And same goes for home office. It is placed here for credit for 26, and in the debit and credit, they will be eliminated, and in the combined will appear equal to 0. Now, from this column, we are ready. From the combined column, we can prepare the combined financial statements. What are these? These are the income statement, the owner's equity statement, and the financial position statement or the balance sheet. Okay, we're gonna make the 3 financial statements like you're gonna see now. Now from the combined column, you're gonna make first the income statement for the year ended 31/12/2018. You're gonna follow the rule of the income statement to start by sales. You're gonna find the sales for 48,000 minus cost of goods sold 28,000. The result will be gross profit for 200,000 minus operating expenses 113,000 equals net income for 87,000. This is the income statement. Then you're gonna move to the retained earnings or the owner's equity statement. We start by the capital at the beginning equal to 70,000, and you're gonna add the net income that you calculated here. You're gonna take the net income from here and place it here. 70 plus 87 equals to 157,000 less dividends. It is given in the combined column for 40,000 equals to retained earnings or the ending balance of retained earnings equals to 117,000. Then we move to the balance sheet. Finally, we're gonna prepare the balance sheet. We're gonna gather all the given assets. Cash equal 30, accounts receivable 57, inventory 60, equipment 150 less accumulated depreciation 10. The net equipment will be 140. Add all these to get the total assets. Then move to the liabilities. We have accounts payable for 20. We have stockholders equity, common stocks, returned earnings. You're gonna get the returned earnings from the returned earnings statement. Add all these together to get the total liabilities and owner's equity for 287,000. By this, you have done and prepared the combined financial statements for the home office. And all these from the combined column from the working paper. Thank you and see you soon.